Quite some volatility we saw in gold this Thursday morning under Fed pressure and a stronger dollar. How are the technicals looking for gold? We have Kitco Senior Technical Analyst Jim Wyckoff joining us now. Jim, good to have you back on.
Hello, Danielle. Always nice to be with you and to talk to our Kitco listeners.
Well, what is happening in gold, Jim? The metal neared a 6-year low this morning. Do you think sub 1,000 gold prices are now possible? Or do you expect investors to step in at these lower prices?
Daniela, that's the million-dollar question. We indeed did see fresh near-term chart damage inflicted in the gold market this week as prices dropped to a 5.5-year low, or close to it anyway, in the futures market. We're at an inflection point here. If we close gold prices lower on Friday and drop December futures below 1072.30, I believe that's the 5.5-year low scored earlier this year. That's basis nearby futures, and that's going to produce longer term chart damage to then suggest a challenge of major psychological support at $1,000.
Well, we know the stronger dollar has been weighing on gold as markets anticipate a rate hike in December, but some strategists suggest that the time to buy gold and sell the dollar may be when the Fed actually makes the first tightening move. Do you agree?
I can't disagree with that. It's a sell the rumor, buy the facts scenario that we all know about. We that have been in the marketplace a long time and have been trading a long time is that traders factor in expected upcoming events, and then when those events occur, they reverse their positions. So indeed, that could be the case. I think what's important, Daniela, is that we are seeing some the raw commodity sector is in a major bust cycle, and just today we saw crude oil prices drop to a new 2.5-month low. Part of gold's pressure recently has indeed been from the stronger dollar, but also from a weakening crude oil market. I said earlier this week in one of my Kitco reports that I think 2016 will see the raw commodity sector bottom out from its bust cycle, and I think you're going to see a rebound in the raw commodity sector, and that includes the precious metals. So we are in the latter stages of this bust cycle, this major bear market. I suspect we could see some more downside price pressure, but I think the upside price potential for gold on a longer-term basis is much greater than the downside potential with prices at present levels.
All right, Jim, that's a good point. On that note, let's get to your market rating for gold and silver, starting with the marks you're giving the metals this week.
Daniela, on a near-term basis, I'm giving both gold and silver a Wyckoff market rating of 1. That's the lowest rating. New contract low in gold, new multi-week low in the silver market. So the bears are in firm near-term technical command. Now looking at December Comex gold for support, we see support right about that 1072.30 level. That's that nearby futures low that we saw this summer. If we take that out, that's going to open the door to a fresh leg down in prices here in the near term. Overhead resistance for December gold is located at about the $1,100 level. December Comex silver sees solid chart support at the summertime low of $13.95, solid overhead resistance at 15.
Jim, thanks so much for your thoughts. We'll see you next week.
Thank you, Daniela. Can't wait till next time. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. We'll see you tomorrow.